Kevin Hincks is here, co-host of Fast Market Live at the CBOE, is here to discuss the big picture because I was just saying what a week it has been. And when you look over 5 weeks, 6 weeks, it really has been a pretty good run. Tell me what you're watching.
Nicole, let's call this week momentous in many different topics, right? And I think the inflation data that we got this week with a significantly lower PPI, let's call it a firm CPI. Remember, all the numbers were pretty much in line. That sets us up for next week's Fed meeting that is going to be important because let's face it, as we end this week and move into next week, the 50 basis points versus 25 basis point discussion is alive and well. And the question, after so much weak labor market data confirmed by yesterday's first-time filers for unemployment insurance, jobless claims data, it's really pointing us towards potentially either more small cuts or a big one here coming up next week. So that'll come Wednesday. We'll get retail sales on Tuesday. That'll be big data. Earnings are starting to thin out, but obviously earnings have been big this week with some of the names like Oracle. So I think that this was a huge week for the overall markets. We're sitting right at all-time highs, and there doesn't seem to be much to get in the way of this market leading up to next Wednesday's Fed decision. Now, that could change the tone. Jerome Powell could come out and be hawkish in his comments, but the next real event is Wednesday's Fed decision. Tuesday, retail sales is an important number, but we're getting some hints that retail sales might be a good number anyway. So I just think right now, this market doesn't seem to have any reason to go down right now. It's drifting higher, and we'll wait for next week for some possibly market-changing events.
And it caught your attention that the VIX, the fear index, had been dropping, in fact, dropped below 15 this week. What story does that tell you?
So the average, all-time average for the VIX, once it became the S&P 500, is 15.39. So we're significantly below that. Now, what does that mean? Well, a grinding higher all-time high market is not great for option implied volatility. You need a two-way trade, and you're just not getting that here. So that's taking its toll on the VIX. As you know, that could change in a moment, right? All we need is some significant sell-off, and that VIX will spike quite quickly. So yeah, the VIX is worth watching. The 10-year yield sitting at around 4%. Remember, it touched just below there yesterday. I'm watching crude oil. I'm watching the U.S. dollar, Nicole. But we're waiting for the next market-moving event, and I think that's Wednesday, Nicole.
Indeed. I mean, the question is, what will the Fed do? I mean, you sort of alluded to it, 25, 50, I mean, all the different asset classes that will be affected by the decision of the Fed. Your thoughts?
Yeah, you're right. And the number one, housing. You're already seeing effects on the housing market. Mortgage apps had a good week this week. We'll get a bunch of housing data next week as well. So if you're looking for some good news in terms of the housing sector, the move in interest rates down to 4%, the corresponding move in mortgage rates that dropped this week, that's big for the housing market. It's also good for stocks. Now, we are getting a little expensive in terms of valuation of the overall market. So that means the bar is high, and we're very susceptible to any negative news. So you have to be cognizant of where you are on the calendar, right? We're into the fall trading season now. So, but the fact that we're grinding higher is taking its toll on volatility. We're looking for the next catalyst. I don't think it'll come today. Consumer sentiment will come out at around 10 o'clock Eastern. I don't think that's a market-changing number, frankly, today. So it's into next week. But how does the market finish the week, right? I always talk about the last trading day of the week and the last trading hour of the day. I think that'll be pretty important because as traders set themselves up for next week's data.
Okay. Last but not least, I don't want to let you go. We've talked about labor and the rates and the action we've seen, the up arrows. How about consumer sentiment? Because that's what we're waiting on, right?
Consumer sentiment number that we're going to get around 10 o'clock Eastern time. Looking for a number around 58, and the 1 year ahead inflation expectations, it was 4.8%. Remember, these are sentiment data. This is that soft data that we talk about a lot. It's not necessarily indicative where the economy is right now, but it's perceived on basically a poll of listeners where they think the overall consumer is, where they think inflation is. So I don't put too much weight in the soft data. I'm kind of in the Scott Bessent, Jerome Powell camp. I look more at the hard data. So the market usually trades off consumer sentiment, though. It'll come out around 10 o'clock Eastern. So they're looking for 58 and about 4.8% on inflation. Nicole.
All right, Kevin Hincks. We'll be waiting for that. Thanks for the preview on that as well. Good to see you, Kevin. Thanks.